One of the ways to determine the US stocks and its indices direction in the long term, it is also to know where the US bonds market is direction, where it is heading. Why? Now, this is because the US bonds is market capitalization. It is as large as the US stock market all combined together in different exchanges. Therefore, it is also very important to track the direction of the bonds market. In the macro trend, over many generations, the bonds and the stock market move in tandem together. Now, what do I mean by that? This means that when the bond market is on an uptrend, the stock market, the indices will also move in the same direction. And similarly, when the bonds market are having a lot of headwinds, moving south, developing into a bear market, so will be the stock as well. Now, there are two key points that I would love to discuss with you today. Number one is that where's the main trend of the US 30 years bonds? And number two, why the stock market is due for a rebound in the coming weeks. But before that, disclaimer, what presented here, it is not a recommendation. Please consult your licensed broker. My mission is to create lateral thinking skill for every investors and traders, knowing when to take a calculated risk with market uncertainty and a bolder risk when opportunity arises. So we're going to move into the first part of our discussion. Where is the main trend of the 30 years T-bonds? Before that, I'm going to remove myself. And if you've been following my previous videos, we discussed about how to construct an uptrend line. And we could see that the US T-bonds over the last 22 years in this chart, more than that, we have a very beautiful uptrend line. But has this uptrend line been compromised? Let's look at it. Now, we discussed about two rules how to construct an uptrend line. The first rule is that we have to find at least three significant bottoms. When I say significant, it means that there must be a pullback, move up, a pullback, and rebound. When that happens, these are the significant bottoms. We have to find at least three. And number two is that the second rule is that then after that, we find the best fit. Now, how to do that is that there's one significant bottoms, maybe two, three, four, five, maybe six, maybe seven. Now let's have an experiment on this. This is a low. And the rule number two is that we have to find the best fit. And this is what I'm going to do. Now you'll realize that this is pretty good where this is one significant bottom followed by second. And the third, it rested on the neckline. There's some false break here. 5, 6, 7. And I would say that over the last 22 years, we witnessed a very solid uptrend line on the bull market for the US T-bonds market over the last 22 years because we are looking at the T-bonds futures monthly chart over the last 22 years. And that's what our experience was, that over the last 22 years, the US stock markets and the indices has been on the bull run. That's what we're seeing here. But something have changed and something have shifted in after the first quarter of 2022 in the month of April. It have broken convincingly about on this uptrend line that we could see here. And if we look at the fundamental, it kind of affirmed that, and we know that the fundamental is that in the next 2 years at least, that my sensing is that the inflation will continue and likely the Fed will continue to hike rate, whether it's at 50 basis point or 75 basis point. But on this manner, it will definitely give a lot of pressure to the stock market. So earlier we discussed about it move in tandem between the bonds and the stock market. Now, I'm seeing that in years to come, the bonds market has just developed into a bear market. But we also have to understand that in this uptrend that we're seeing over the last 22 years, though it's an uptrend, but its life is full of volatility. It's moving jagged, though it's an uptrend. And similarly, in a bear market, it do not just move one way straight down. Now, what do I mean by that here is that let me just expand this chart a little bit here. Now, what I'm seeing here is that at the settlement of June, I could see a very classic hammer. Of course, in month of May, I saw that. But when June settled, I saw a hammer that's more classic than the month of May. So I'm really interested at the settlement of June. What I'm trying to say here is that maybe let me just indicate where is this hammer. And after that, I'm going to move back to give you a more holistic picture. All right. Now, so I have established a long position, though my motivation really is to short the market, which I have two portfolio. I've created some long-term short already, but in the same time for the next few periods. Now, bear in mind that this is a monthly chart, means that in the next few months to come, I'm seeing market to have a retracement up, something like this. And then when opportunity strike in months to come, the market will tell me when. The market will tell us when. I will prepare to short the market even more. I will add on to the short position I have. But on a short-term trade that I have, maybe for the next few months or the mid-term trade, I will, if you have not long, I will maybe encourage you to look for a point to get into a long position with a measured and calculated risk. Means that if any of the period it closed below the June low, I would have stopped myself out. But for the time being, that's what I'm seeing, that market will likely to do a rebound before it start to continue its bear trend. Now, for those are really interested to really explore into and research into the bonds market, this is what you can do. What I do is that I go to futures and I will go to the bonds, and you will find the UST bonds or the notes, Treasury, and you're able to see the 2 years, 5 years, and 10 years. But those who like to explore into the yield curve, you could also look at yield as well. You move in the opposite direction of the bonds market as well. So you could see that there's 2 years, 5 years, 10, and 30 years yield. So feel free to leave any comments below. I would love to exchange great ideas with you. And for more market insights and techniques, I hope to see you again very, very, very soon. Continue to explore this topic with these related videos and register for these webinars as well. Follow my Facebook page for my daily market insights. To be updated with my latest video, subscribe to my channel and remember to turn on the notification bell. See you again very, very, very soon.